Hello, this is Evan here from the Trade Risk on Wednesday, February 9th, 2022. We are intraday right now, and this is our weekly swing trade ideas video, sort of a market pulse video. Take a look at what's moving and what has sort of my attention here is what we're going to kind of overview today. As always, these videos are sponsored by our partners over at Investors Business Daily. We curate all of our long ideas using stocks from their stock lists, and you can get access to those stock lists with a link in the description of this video. Now, unfortunately, this isn't the most bullish time for long ideas right now, so we've got more that we're going to focus on, I think, on the sort of pessimistic glass half empty side. But let's first take a peek here at what the markets are doing, what the major indices are doing. You can see the S&P 500 in rally mode today. It's up over 1%. And if you take a look pretty close here, you can see that the last 4 days, we carved out this very tight range, or I mean, actually, I wouldn't say very tight, very stacked and overlapping range over the past 4 days. It's been a bit volatile in here, moving between about 445 to about 451. And you can see just the last 4 days absolutely kind of just churned sideways. And now we are getting this kind of gap up and retest of last week's highs. So that is sort of the development here. You can basically look across the board. You can look at the Nasdaq 100, same thing, 4 days sideways. Now we're popping and breaking out of the range to the upside. And then the Russell 2000 here has been grinding off of its lows. So a couple of things I want to take note of course, if you watched last Friday's video and even the last several weeks' videos, you can sort of know that we see that the kind of weight of the evidence approach right now is tipped to the bear side. There are just more things that are aligned in the seller, in the bear case right now from a short to intermediate term time frame. That really hasn't changed. We are getting a bounce here in price, but when you look under the hood, when you look at some of the other factors that we drill down into on our weekend videos, those come out every Friday. Definitely recommend you check those out if you want to keep up to date with a market pulse. Then you can see that things aren't that we haven't quite reversed a lot of what we are sort of concerned about. So the big high levels that we're still paying attention to, as we said last week, was essentially this band up here, which was last week's highs. Can the market get enough strength to start breaking through 460, 4,600 in the S&P 500? Can it stay above there? Can it actually take out this pivot? That's what we'd be paying attention to. That would get our attention and start turning some of those other underneath the hood signs that we are seeing currently negative to the bullish side. But until and if that happens, I still want to be very cautious in here as the market rallies back up into this zone. Take a look at the Russell 2000. So the Russell 2000, remember, if we look at, say, this view here, which is just the real simplified view, we had a year-long range where we went sideways, went absolutely nowhere, and then we broke down from that year-long range. So right now, we're rallying back up to all of this overhead supply in here. Now, yes, there is a scenario that this turns into something like this, right? Remember the big failed breakout here back in the fourth quarter of 2021? Obviously we didn't know that in real time, but this was breaking out. This looked good, year-long range, breaking out to the upside, all-time highs, and then it quickly, dropped back down, reversed, and failed. So that could happen down here. There is a probability for it. I'll never say anything is not possible, but right now, I would rather be much more cautious up here as price starts to get back up towards this band up here. And I would, really be looking opportunistically to, defend the portfolio. And if you're looking on the short side, then you're looking up in this range as well. So those are a few of the high level ideas. If we also take a look at oil here. So I tweeted this yesterday. So we had oil kind of gapping down yesterday and actually sort of pointed out this XLE chart here. And you kind of had this, let's see, I think I annotated it on TradingView, but we basically had, this 68.30 level, which was the prior highs. We had this little mini kind of double top here and then a thrust down. So I'm getting a little more suspect here, and maybe the prime leadership group, XLE, that maybe we're seeing a change of character. Again, it's extremely subtle. It's extremely counter trend. I'm not willing to, pound the table here and say short, short, short. I think that's foolish and a good way to lose a lot of money. But if you're tactical, if you're active and you're able to manage risk here, I think, looking at potential potentially an energy short as a trend reversal to move back down to the low 60s can make some sense. Again, full disclosure there that that is a higher risk, more advanced type of trade. So with that, I want to talk a couple of trade ideas here. We run through scans, we look at the bullish side, we look at the bearish side, and today we are still seeing in our short-term scans a lot more results on the downside, which is, again, a very funny thing given the fact that all the indices are up 1.5% today. So I want to point our attention to something like a CBOE, which is hitting our breakout failure scan. So essentially what you're looking for here in this scan, it's on our website. If you're a TC2000 user, you can download it. It's called our breakout failure scan. And what this is looking for is sort of a move, a thrust off of the lows. So you get this kind of newly developed downtrend. You've got this thrust, kind of overbought conditions in the short term. And then you've got this gap up, and then a failure to hold those highs. So you're closing back down at lows. So you can see the stock opened up, over 1% to the upside, and now it's down on the day, and it's, sinking down here into the end of the session. You've got something like Sonos, which is also kind of doing the same thing. You've got this nice rally off of the lows. You're in a primary downtrend, and you're kind of failing to hold on to those highs and trading near its lows. You've got Overstock hitting the same exact scan. So breakout failure scan, primary kind of downtrend here that we were in for the past month or two, rally off of the lows, tried to, kind of open up higher and probe higher, and now we're starting to reverse. Last but not least, TTEK, very similar here in industrial space. Got this downtrend, got this nice move off of the lows, and now you're starting to fail up here. So these are all very short-term, very tactical trades. Again, please do your homework. Make sure you can manage risk. Don't be married to any positions. You have to know when to cut losses and manage risk. But I do think right now, we are getting a little bit frothy again to the upside, and we just want to be very, very careful about chasing things as we come back into resistance. So that is the Trade Ideas market update for this week, Wednesday, February 9th. Thanks so much for tuning in and watching. Let us know your thoughts in the comments section below. Are you buying into this rally? Are you seeing things improve enough? Or are you sort of doubting this market and being a little bit careful and cautious? Leave a comment below. Let us know. And as always, I want to thank you for tuning in every Wednesday. Trade Ideas just like this and market updates. Subscribe to our YouTube channel to stay up to date, or follow us at thetraderisk.com. We'll see you back here on Friday for the long form market analysis video.